So thinking about all those risks, I pose this question to you. Do you really want to add fighting with the IRS to that list of risks? And if you do, you know, God bless you, but you're probably not the company that I'd be working with, because, you know, to me, that's just doesn't make good business sense, right? The IRS in 2015 put out a roadmap for how you should calculate your cost of goods sold. We'll talk about it more later. But whenever the IRS gives us a gift like saying, well, here's kind of how we think you should do something, it behooves us to kind of follow it. And I think that's what I heard after that was a lot of people saying, well, that's just the IRS's position. We don't necessarily have to do it that way. If push comes to shove, maybe we'll fight them in court. Yeah, right. Okay. Like I said, you want to add fighting with the IRS in court about tax positions on top of all the other business risks you have in this industry. Okay. Right. So you can see my cynicism on that kind of silliness. So I would say, it's better in business, okay? This is the thing that I think everyone has to get to, and established businesses know this principle. It doesn't matter as much, right? I mean, obviously you can't be taxed out of complete operation, but the amount of tax is not as important as knowing what the answer is, right? What you need in business is predictability, and so if you have a position that you know the IRS will go for, it's better that you kind of work within that position as much as you can to create some predictability. That's what's going to be better for your business than creating a lot of uncertainty where you may have to deal or fight with the IRS at some point in the future. Now, I've talked about this topic of we go with the IRS position for this in the past, and again, the people who are on the other side of the table for me on this position, or maybe disagree with me on this, what they would say is, well, IRS positions can in fact be challenged in court. Yep, they sure can. You know, you can prove that an IRS interpretation is not consistent with the regulation or the underlying statute. You can potentially prevail against the IRS. But typically the businesses that do this, they're working very closely with their law firms. That doesn't mean they talk to their law firm once a year. That means they are working with lawyers on a quarterly, monthly, regular basis, because they are taking risky positions, probably not just here, but in other things that require the ongoing attention of expensive lawyers. So what I find comical, to be frank, are businesses that claim to be taking these kinds of risk under lawyers' supervision or advice, and yet they actually don't have regular and continuous work with their lawyers. They may work with their lawyers like once a year. That's ridiculous. If you're gonna go down the road of saying, hey, we've decided we're gonna take positions and fight it out with the IRS, then I suggest you actually have your lawyers prepare your tax returns. Did you know they can do that? Lawyers can prepare tax returns. And if you're gonna take controversial positions in the rest of the world, in the rest of the business world, that's exactly what they do. Big corporations that are taking controversial positions work with law firms that are very expensive to prepare their taxes and basically get everything in a row, getting ready to litigate on those issues. So this is not child's play. This isn't something you just kind of say, yeah, I read somewhere that you can go against the IRS if you want, if you just have a different opinion, and you can litigate it later. So that's what we decided to do this morning, right? No, if you're going to do that, this is something you do by sitting in an expensive conference room with your lawyers on a regular basis to hammer out and keep that strategy, keep on top of such a strategy. And in that case, like for me, again, that wouldn't be the kind of business that I'd be working with, because they wouldn't need me. They would have the lawyers. They'd be sitting at the table with the lawyers. They wouldn't be working with an accountant and a CFO level consultant like me on these issues at that point. So that would preclude me from really working with those clients anyway, if that's where they were with how they wanted to administer taxes. So again, I'd say that's a pretty extreme way to administer your taxes and not what I recommend. Well, that's it on this topic. The next topic that I'm going to get into is defining Section 280E and talking what I see as the multiple legs of tax planning that can be done from Section 280E. Thanks, and I'll see you next time.